What is up, guys and girls, and welcome to Deck Does Investing, the wealth, investing and finance channel. Before we start, I'd like to ask you to hit the subscribe button to join me on my journey, and also hit the like button to help me out with that YouTube algorithm. In today's video, I have a stock from the US, which I personally feel is a great buy now for growth in the future. In this video, I will give you some background information on the company, and then I'll run through some analysis and some fundamentals as to why I personally feel like this company is a buy. However, I would like to point out that this video is just for entertainment purposes and should not be taken as financial advice. As always, you should do your own research before purchasing any stock, as your capital will be at risk. So the stock I'm going to cover in this video is Advanced Micro Devices, which has the ticker symbol AMD and is traded on the Nasdaq. Founded back in 1969, AMD has a market capital of £61.6 billion and is from the semiconductor sector. Taken from their website, AMD's vision is to transform lives with high-performance computing. A Silicon Valley startup, the AMD journey began with dozens of employees focused on leading-edge semiconductor properties. From those modest beginnings, AMD has grown into a global company of 10,000 people, achieving many important industry firsts along the way. AMD today develops high-performance computing and visualization products to solve some of the world's toughest and most interesting challenges. There has never been a better time to be in the semiconductor industry, and we are ready to tackle the next 50 years with high-performance computing and graphic solutions that will transform all of our lives. If we take a look at the one-year chart of AMD, we can see that the pandemic really hasn't held back the performance of this stock, and despite its pullback, it is now trading near its all-time highs. It had a 52-week high of $58.90 back in February, and at the time of making this video, AMD is currently trading at a share price of $52.61. Taking a look at shareholder returns, we can see that over the past 5-year period, AMD has returned an eye-watering 2,517.4%, which massively outperformed a very impressive industry average of 194.2%, and also a 65.9% return from the market. Simply Wall Street and their analysts currently undervalue AMD by 1.4%, in which they give it a fair value of $53.34. This shows that AMD is currently priced fairly in relation to its future cash flows, and if it can maintain its current growth rate, then this could be a fantastic buying opportunity. And because of this, I've recently opened a position in AMD myself. Looking at its value a bit more, it's currently trading at a PE ratio of 121.3 times its earnings, which is astronomical, and over 3 times out of its industry average of 36.5 times, and considerably higher than the market, which is trading at 16.5. Based off these figures, there isn't any quote-unquote value to be had on AMD in comparison to its industry average, nor the market. However, with growth stocks, you're buying at a premium for their future growth and performance, and therefore, high PE ratios are quite the norm. If we now look at AMD's forecasted annual earnings growth, it is expected to grow 36.7%, which outperforms its industry average of 25.2% and also beats the market, which is forecasted to grow 22.7%. This is also reflected in their forecasted annual revenue growth, in which AMD is expected to grow by 17.1%, which again outperforms both the industry average and the market, which is expected to grow 9.5% and 9.2% respectively. Not only are AMD's forecasted earnings and revenue great, but also their past performance has been just as good, and if not better. As we can see from the graph, the revenue has been rapidly increasing, whilst earnings have been on a steady increase as well. We can also see that the profit margins are up from the previous year as well. Touching on its past performance in more detail, we can see that both its 5-year and past year performance has been remarkable. Over the past 5 years, AMD has grew its earnings by a whopping 66.2%, which is over 3 times its industry average of 19.9%, and almost 5 times that of the market of 13.6%. It gets even better over the last 1-year period, in which AMD grew its earnings by a staggering 78.6%, which dwarfs its industry average, which had a negative return of 10.8%, and also the market, which saw a return of 0.6%. Moving on to the financial health of AMD, we can see that it boasts a very strong financial position, in which its short-term liabilities of $2 billion and long-term liabilities of $842 million are covered by its short-term assets. Looking at the financial health of AMD in a bit more depth now, we can see that as of March 28th of this year, it had equity of $3.037 billion and had debt of $488 million. This gives it a debt-to-equity ratio of 14.7%, which is very good, and also we can see from the graph that this debt level has been decreasing over the years. whereas on the contrary, equity has been increasing year on year. Finally, it must also be said that AMD's debt is well covered by its operational cash flow. So AMD doesn't actually offer a dividend at the moment, and this is quite common practice for growth stocks, as any spare cash and operational cash flow tends to get ploughed back into the company to aid in growth. However, with the growth and also the returns the shareholders have seen, I don't think this lack of income from dividends has been too much of an issue. So that wraps up my analysis on AMD. Please let me know down below your thoughts and opinions on my stock pick and whether or not you'd buy AMD yourself. So if you've liked the video, please drop it a like, subscribe if you want to see more content like this, and if you've missed any previous updates, there'll be a link to the playlist in the description down below, along with some other videos that may be of interest to you. And until next time, peace.